Okay, g'day, Rudy here. So off the back of the food ETF vid, I thought I'd have a look at Coles and Woolies and the CBA sort of workout that I did about 4 weeks ago. Now this is Coles. I was at the time saying supermarkets with bullish chart patterns. What's going on? Well, so far, and I couldn't decide between Coles and Woolies, but there's now a clear winner. So Coles is looking wonderful. That's about all I can say. Now Woolworths, again, it's a buy down here, declining wedge, and a big long-term bull flag going on there. So we're looking at the comparison Coles over Woolies. So at the time it was, I think, about this candle. So Coles could have jumped, wasn't confirmed yet, but it looks pretty set in stone now that Woolies is the winner in terms of share price appreciation. Then we were comparing it to Commonwealth Bank. So Commonwealth Bank, so it's just hanging in on that long-term trend channel there. Now it could go bullish too. The banks are making a fool of me. Technically, I did say to sell back here, so that I'm still in the right at the moment. So it hasn't broken through yet. So if it breaks through, then that puts Commonwealth Bank bullish. All right. So then we've got to do. Okay. So we do Woolworths over CBA. So big declining wedge, CBA outperforming Woolworths. So we had a breakthrough, and then CBA took over. Then we've had another break of the declining wedge. Big green candle for Woolies last week, and this is this week's candle. And you know what consolidation at the highs means? That's bullish. So we've got Woolies over CBA. They probably pay about the same div now, around three-ish. So Woolies looks like it's got it over CBA. Okay, so then I've always got to compare it to the king now, being the MVR, the resource ETF. So Woolworths over MVR. Okay, so you could say long term that's a declining wedge there. And declining wedge is when broken. When broken is the word. So up is Woolies and down is MVR winning. So this week, so Woolies has a good week this week, but it still needs to do a bit more over MVR. So it's not locked in, so that's called a draw. So it's a draw with MVR. And then if we compare it with the food ETF, I should have done it in the food ETF, but oh well. So this is Woolies over the food ETF. Now they're different beasts really, because food ETF is, I guess, more of it's machinery and crop nutrients, and it's different to what Woolies does. You probably should have both of them really, but this shows a nice support here with Woolies. Looks like Woolies is outperforming in the short term. But if you can afford it, you'd probably go both just for diversification. But I guess it just proved there's a bit of sort of switching going on around at the moment, like the healthcare ETF I did. There's a bit of rotation, I think they call it. All right, I just thought that was quite interesting. All right then, let me know your thoughts. See ya.